Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Nifty is in the green, but it has fallen from the highs. Been quite volatile. Recovered from the lows. Then again, it saw a fall. And Nifty Bank, that continues to be the pain point.
Like you mentioned, the Nifty Bank is what is the pain point. Continues to underperform, and that continues to be a bit of a worry as far as markets are concerned. But quite a lot lined up on the show. A couple of important managements that will go ahead and talk about Q4. Let's start the show with the top headlines now. Stocks mark time ahead of the release of the minutes of the US FOMC meeting, with market breadth in the neutral zone. FMCG and realty stocks eke out some gains, while financials and banks drag mid-caps in line.
Vortec Wabag under pressure despite reporting operationally good fourth quarter earnings. Margins expanded on year-on-year basis, but top-line growth was muted. Management tells CNBC-TV18 that order book will grow to 16,000 to 17,000 crore rupees in FY25.
Gulf Oil Lubricants trades in the green after reporting a strong set of Q4 FY24 earnings. Revenue and EBITDA grow sequentially. Company sales growth in Q4 was led by double-digit growth in infra, mining and B2B segments.
GSFC falls after company reports weak quarter four. Margins and net profits see a sharp decline. Capital active benzene spreads also significantly lower at $695 per ton on a YOY basis.
Metropolis Healthcare surges in trade following its fourth quarter earnings. Revenues and margins beat street estimates. Management in its conference call tells that they are looking at mid-teen growth in FY25 and are aiming for margins up to 26% in FY25.
Okay, all right, for the markets, let's quickly look at what the indices are doing. Nifty, that one is up around 50 points right now. As I was pointing out earlier, it has fallen from the highs though. Mid-caps largely in line with the benchmarks, but Bank Nifty continues to be under pressure. And that is the one which is the main pain point that we've been talking about. So it's 328 points lower there. Nifty FMCG is the top gainer. Some of these FMCG names are seeing a comeback. Metal index, which was doing well, has come in for some profit booking. So it's really a lot of moving parts in the markets and a lot of results that are coming in.
A lot of results coming in, a lot of important results too, yet to come in. Look at Sun Pharma, that'll be something that'll declare its results. Jubilant Foodworks, a lot of interest always in this stock. But this is our special segment, Mid-Cap Movers, where we have Hormaz to take us to the mid-caps that are moving around in the session.
Choppy as we counting down to the Lok Sabha election results, but there are plenty of earnings reactions that are coming in as we count down to the close of this earnings season, and Gulf Oil Lubricants is now nearing a record high, 12% higher after some very strong results, the dividend announcement as well. PI Industries opened lower but has recovered significantly, 3.5% higher after some strong management commentary there, and Metropolis also trading with gains of close to 5%. And some of the others, the defense as a space continues to do very well. Bharat Dynamics is at a record high. BEML is up 9%. And BEL, the management saying some strong commentary in the earnings call, is up 2% as well, recovering from the lows of the day. The other segment that has done well in today's trading session, and those stocks will come up on your screen as well. 3 infra names that emerged as the L1 bidders for order wins. HG Infra is at, barring HG Infra, now HG Infra is at a record high. PNC Infra is up 16%. That is at a record high as well. And GR Infra also emerged as an L1 bidder for a project that is up another 5%. Stocks that are doing well on the back of volumes. GIC and New India Assurance both trading with very strong volumes today ahead of results. Both of them will come out with results today. And auto ancillaries as a space is doing very well. CIE Automotive and JBM Auto, both of them 5.5 to 6.5% higher on very strong volumes. And some result reactions on the negative end there. GSFC now 8% lower now at the lowest point of the day. Maharashtra Seamless, we spoke to the management earlier in the day. Global Health and BHEL was down 7% at one point, but is still down 5% after some buying at lower levels. Back to you.
Hey, that is an interesting list. Thank you so much, Hormaz, for joining us as always. Just a correction, Nifty is at the day's high. It hasn't fallen from the highs, something that I suggested earlier. So Nifty is up around 50 points right now at the day's high there. But let's move on and focus on DB Corp. The stock surged in trade after reporting its fourth quarter earnings a while ago. Margins expanded and revenues grew 16% on a YOY basis. The advertising revenue led to this growth this time, grew by 24.6%. To discuss this and more, we have Girish Agrawal, the promoter director of the company, joining us now. Mr. Agrawal, good afternoon. Always a pleasure speaking with you. And last couple of quarters have been stellar in terms of earnings. Tell us what the outlook is going to be like. Is this a sustainable sustainable rate of growth that you're going with in FY25 as well? What's the target for revenue and margins?
I love this approach of journalists that you don't even let a person feel happy for a minute about the laurels and we talk about the future. So let me stick to
I
the
think the
past.
stock markets love future guidance and future numbers. I think that's what we are trying to achieve.
See, this year we have achieved the ever highest EBITDA, for the company at 703 crores and a PAT of almost 425 crores. But we have to also be cognizant of the fact that last year was the election year, where there a lot of spending done by the government in the market and the disposable income of individuals increased. So that also resulted in the higher advertising from the private sector, as well as the government advertising was on a peak. But looking forward, I think the Lok Sabha results should be out in next 15 days' time. And the positivity what we see in the market, I think next year is going to be another stellar year for us also.
So when you spoke about advertising revenue, we understand that there was a significant component that came in from the election spending. Now, going into FY25, we believe that, like you just mentioned, that could taper off a little bit. Could you quantify the kind of advertising growth that you're expecting to see in FY25?
So we believe that the categories like real estate, automobile, jewelry, lifestyle, that will continue to grow. Only the government, which has seen the substantial growth this year because of election, that may go down. So I think overall number should be still in a strong single digit or touching double digit also.
Okay, strong single digit or double digit as well. What about margins, Mr. Agrawal? We've seen newsprint paper prices go down. You've spoken about cost initiatives as well that you've taken. Will it continue to be in the same range that you've seen in FY24?
See, the newsprint price last year was 60,000 rupees a ton, which has come down to 49,500 rupees a ton. And as we speak, looks like that the next quarter, the prices may go down by another further 4 to 5%. Now, going forward, frankly speaking, this is a commodity market. We don't know what will happen. But even if the price stays at this level, there's a huge saving going forward for us.
Okay. Give us a sense of the current circulation that you enjoy. What is the outlook for growth that you're expecting in FY25? We understand that this year, again, it could have been slightly higher due to the election.
Circulation has been maintained over the number. And I think our focus is there that we need to increase the circulation by at least 3 to 4% this year. And all efforts are on that.
Okay. I wanted to understand the split in terms of your end user, the advertisers, apologies. Government, the last time we spoke, was around 20% in terms of the ad spends. Considering FY25, how dynamics will change here, which do you think will be the biggest contributor in terms of ad spends? What is the split currently?
See, government generally, if you look at the average, it stays in the range of around 13 to 15% of advertising. This year, because of election, it certainly went up much higher. So next year, I would assume they would come back to the same number of around 14-15% of our total revenue. And the second biggest category after that is education and real estate for us. And these two categories are further going strong. So we believe the momentum will continue, should continue.
So you expect momentum to continue, and on this elevated base, you're expecting high single digit to maybe a low double digit. Is that correct, sir?
Yes, that's what we are going to work hard this year for.
Okay, sir. So now we are coming to the digital business. What is the revenue run rate that you've managed to achieve over here? Has it broken even? And do you have any plans of value unlocking in this particular segment?
Digital is doing very good. We have around 15 million monthly active users. These guys spend almost 15 minutes with us. And we are very happy with the response, especially with the kind of traction we have got with the earlier state elections and now Lok Sabha elections. So digital is doing very good. And we are very positive and confident of the way forward on that.
Digital is actually the buzzword now. So will there be more spends? Will the cost items have more spends toward digital in your P&L? What is the strategy in terms of user addition? And at what level do you think you will be able to monetize this particular opportunity?
To be very honest, digital doesn't need much of money, because we already have the huge journalist network. Like 3,500 journalists are working with us. They contribute for print as well as for the digital also. The extra cost is only the technology cost. So that's not something earth-shattering. So whatever is required there, we are doing it.
Okay. Going into FY25, you did mention that, since newsprint prices are essentially a commodity cost, maybe you wouldn't be able to gauge the exact trajectory of the prices there. But what is it internally that you're targeting, number one, in terms of revenue for FY25, the EBITDA margins, and the bottom line?
You are talking to a Marwadi organization. Certainly, we are looking at much reduction in cost and much high growth in the revenue. That's our internal working. But it has to spend in the market, so nobody can really comment on that.
Mr. Agrawal, I get that sentiment. You're also talking to a Marwadi journalist. That's why it's imperative for me to ask you again, what kind of growth targets do you have? While you have said that it'll be in high single digits or low double digits, can you give us a sense of the digital business again? Because that is the, the buzzword, as I said earlier. At what level do you think you will monetize it? Is there any plan in that direction? Because that is something that the street and the investors definitely want to know.
So in our business, we say there's a buzzword and which is the actual word. The actual word is print, which is growing, giving it the number. Out of this 703 crore rupees, the largest chunk, I would say more than 90%, 95% belongs to print. Digital is in a very nascent stage. We are getting more numbers, more people enjoying us on the digital. And monetization is some time ahead still, and much to be desired, to be very honest.
Okay. All right. Thank you so much for joining us, Mr. Agrawal, and giving us all those details. So that's the word coming in from DB Corp. FY24 ended on a strong note. They expect the momentum to continue in FY25 as well, despite the election significance going away in that financial year. But we'll slip into a short break. When we return, we'll be joined by the management of NIIT Learning Systems to discuss the Q4 numbers. Stay tuned for that.
Welcome back to Midcap Radar. One particular stock that we want to discuss is Vatek Wabag. We had the management on our show, after the company declared its Q4 results yesterday. The management came on our show. They came and clarified about, what exactly happened in terms of Q4 gone by, what was the reason for the dip in sequentially in the order book, and the kind of order inflows that they're anticipating. And post that, there has been quite a bit of a sharp recovery in Vatek Wabag. The stock saw an intraday low of close to 915 rupees a share. Stock now has rebounded quite sharply to almost 970 rupees a share. But, we have another management lined up on the show. The next management is NIIT Learning Systems that just reported its Q4 results a while ago. The company reported a decent set of Q4 numbers, margins expanded, and EBITDA jumped by 11% on a year-on-year basis. To discuss this and more, we have Sapnesh Lalla, the CEO of NIIT Learning Systems, with us. Good afternoon, sir. Welcome to CNBC-TV18. First up, could you quantify the kind of constant currency growth that you saw both in CC terms, both on a year-on-year basis as well as on a sequential basis?
So on a year-on-year basis, we saw approximately 10%, a little over 10% constant currency growth. On a quarter-on-quarter basis, we saw 2% constant currency growth. So for the year, we had 10% or 10.2% constant currency growth.
The street seems to like your numbers, Mr. Lalla. So we want to understand what the outlook for FY25 is. FY24 revenue rose around 14%. Do you expect this to continue? What are the demand trends looking like? And which are the segments which are driving growth?
So we still see significant headwinds from a demand perspective. We've seen compression in demand with our existing customers. What we are, however, able to do to offset the compression in spends with existing customers is to bring on new customers and to increase our wallet share with several of our existing customers. This year, we expect growth to be a little bit higher or in line with last year. So we expect between 12 to 14% growth in this year.
Mr. Lalla, so you're expecting 12 to 14% growth on a YOY basis of FY25 over FY24. So are you on track? Earlier, you had guided the street to a revenue milestone in the range of $400 to $500 million by FY27. So are you on track, despite the fact that you just mentioned quite a few headwinds still exist?
Yeah, I think the way we are thinking about it is, you're right, absolutely, that we have headwinds to deal with. But we also have a very strong balance sheet and a pipeline of inorganic opportunities. So we expect that by augmenting our organic growth rates with inorganic opportunities, we should still be in line with meeting our goals.
So in that case, does this mean that your future growth will largely be led by inorganic acquisitions or inorganic growth? Can you give us what the pipeline is looking like? Anything that we can hear in this year itself when it comes to acquisitions?
In terms of specifics, you'll get to know when things materialize. But we have organizations, very attractive organizations that we are looking at. And to your comment on whether majority of the growth is going to come from inorganic, that's not accurate. I think we will have a balanced opportunity between organic and inorganic.
Okay, one more thing which we want to understand, every time you make an acquisition, what is the kind of valuation you typically give to the organization you look to acquire? And generally, in terms of the size of the acquiring company or the company that you're looking at, what would be the size in terms of how much it would be able to add to your own top line?
So we don't look at blockbuster acquisitions or like a one and done style acquisition. We look at acquisitions that add to our capability or bring a new market segment for us to serve, or look at a new geography. So those are the three aspects that we look at. The sweet spot for an acquisition is between $20 to $40 million in revenue. So we are not looking at organizations that might be $200, $300 million in revenue. We look at organizations that can help bootstrap our operations, maybe in a new geography or with a new segment, or augment the capability that we have. And that's really our focus.
Okay. I wanted to understand this 12 to 14% target that you have for FY25. You did indicate there are still some headwinds and you're still expecting decent growth in FY25. What is making you so confident on that? Is it coming in from existing clients, or you are looking at newer clients as well? And what is the indication on budgets with large clients right now? Have they said anything in their commentary or their indications?
There is uncertainty in terms of spend. Organizations are very hesitant to write large checks, but organizations are willing to look at opportunities which enable them to transform to a lower cost basis. So there are opportunities for cost takeout. Those opportunities the new opportunities are taking longer to close as compared to the past. But I think we have a number of large, interesting opportunities in our pipeline that gives us or that enable us to create an expectation of 12 to 14% growth as we look ahead.
Mr. Lalla, you've given us the top line guidance of 12 to 14% growth that you wish to achieve in FY25. Give us a sense of the margins trajectory and also the bottom line. What is it that you're targeting? Secondly, what is the impact of competition, especially from a player like Upgrad? Is that impacting, the kind of revenue visibility that you're seeing from clients?
So we actually do not compete with Upgrad. Upgrad addresses very different market segments as compared to NIT. However, we have significant competitors that we do compete with. Some of the largest GSIs like IBM and Accenture are our competitors, just as a number of regional players like Seagos is a competitor. We are very well placed from a growth and profitability perspective, as well as the value that we bring to our customers as compared to our competitors. And that's the reason why our customers trust us. We continue to have a 100% contract renewal record with our customers over the last almost 10 years. I think your question on what's our view on margin, as you are probably aware, we finished the year with about 24% EBITDA margin. We expect a little bit of a knock on the margin as we look ahead. We think that we might end between 22, 23, 24. So somewhere in the range of 22 to 23%.
Okay, all right, Mr. Lalla, such a pleasure speaking with you. Thank you so much for joining us and patiently answering all those questions and being very candid about what's happening in the industry as well. That's the word coming in from NIIT Learning Solutions. Ended FY24 on a strong note. The stock is higher by 2.5%. They're expecting 10 to 12% revenue growth in FY24 with margins in the range of 23 to 25% as well. We'll slip into a break. When we come back, we'll talk about markets and we'll put focus on Cipla as well. It has received FDA approval for an injection used in treating hormonal tumors. The stock is surging in trade. We'll talk about that in just a bit. Welcome back. Well, the stock we are focusing on today is Cipla. The stock is surging in trade, a big mover in the Nifty pack as well. Ekta is joining us to tell us what's happening here. Ekta.
Thanks for that. Well, Cipla has received approval for lanreotide injection or samotulin depot in generic. Now, it is the first generic to be approved for this product, but it was already in the market selling lanreotide because it had approval via the 505(b)(2) route, which the US FDA allows. And hence, Cipla was selling the lanreotide injection in the auto-injector form in the US already, and they already have around 20% market share in this particular drug. Now, according to analysts, they're probably generating around $100 to $150 million from this particular 505(b)(2) version of the drug. And estimates are that Cipla could make anywhere, it depends on what their strategy would be. It could they could probably not want to cannibalize the market share that they already have, so then they would make probably $20 to $30 million. But if in case they do launch full-fledgedly, then the sales that they make from this particular drug can go up. This is assuming 20 to 30% price erosion, 25% market share. Now, importantly, this approval is in line with the company's guidance of big-ticket peptide approvals in Q1. The drug, which we're talking about, is used for neuroendocrine tumors, and hence the stock, as you can see, is up 3.3%.
Thank you so much, Ekta, for making sense of that complicated approval and what exactly it means for Cipla. No wonder
and the pronunciations as well. The complicated pronunciations.
Absolutely. But that's all the time we have on this edition of Quick Cap Radar. Your stocks when we return.